If someone's a veteran and has not used their certificate of eligibility, they have full 100% use of that certificate to be able to finance. And what that really means or breaks down to is that they can go up to, in San Diego County, $537,500 on a purchase price and have 100% financed. They don't need a down payment. They have no monthly mortgage insurance assessed to that. So that broad bases them and gives them a really wonderful opportunity to buy many different properties here in this county for that high price position. VA actually goes up to $1 million to $1.5 million depending on county, but the breakdown, it's not 100% financing at that point. It requires the vet bring in some money, and that would depend on the location, the price, and the county in which they're located in. But they do in fact go up over $1 million. If a veteran is got at least a 10% disability minimum, they don't have to have anything more than that. There's no required upfront funding fee for mortgage insurance, which is the only thing that VA has that adds a mortgage insurance factor to the fact it's government insured product. That's wonderful, because if the person is not a disabled vet up to 10%, just somebody that's not used their certificate of eligibility, their upfront funding fee would be 2.15% of the purchase price, which can tack on a significant amount to the loan amount. They don't have to bring that money to close, but it gets added onto the loan. Therefore, it increases their monthly payment. So it's important for a disabled vet to realize that they don't have that. They get to waive that if they have a 10% disability or more. VA has a very competitive interest rates. VA and FHA both priced currently are even better than conventional. So you can get best price pricing, and a lot of people are misunderstanding that they think that if they use one of those two options that they pay a higher interest rate than somebody for conventional financing. And that's not true, because they're government protected loans. Guaranteed. FICO score for VA, not a consideration. It's an entirely different format for the way that the borrower is pre-qualified. So if you think that you're a vet and you have a certificate of eligibility, but you're concerned your credit's not that good, don't give up on the fact that that could very well be a very good viable way of buying the house, because it's not so credit driven. It's not a program that's based on that. No reserve requirements for VA financing. So you don't have to have anything in the bank other than your earnest money deposit that you're coming in with at the house. There are also programs that can get you closing cost coverage. Sellers cover closing costs in a lot of VA programs and financing. So you don't have to have a lot of money in your reserves or in your bank to be able to transact if you have a VA eligibility.